How do custom orders work on Kraken? Imagine I'm a music producer, dialing in my newest track. Need more bass? Crank it. Vocals not popping? Double it up. Want a bigger sound? Hit that reverb. Hard. That's custom orders on Kraken. Complete control over your crypto trades. Go to Kraken.com and see what crypto can be. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payword Interactive Inc. View PWI's disclosures on Kraken.com/legal/disclosures.
This episode is brought to you by Merrill. Join one of the most iconic names in wealth management, Merrill. You'll be part of a dynamic team of advisors and specialists working hard every day to grow their clients' wealth. And with the support of best-in-class research, advanced digital tools, and the resources of a global institution, it's truly an opportunity you can be bullish about. Learn more at careers.bankofamerica.com. Copyright 2024, Bank of America Corporation.
Good morning, guys, and welcome to the podcast. I've got a fantastic guest for you today coming out of Dallas, Keith Blackborg. He is a CPA, but most importantly, father, husband. He's a wealth optimizer, tech strategist, and he helps individuals, business owners, entrepreneurs reach work optional in 3 to 5 years. So today's conversation is all financial and kind of bread and butter topics for the audience, and I'm really happy to have him. So Keith, welcome.
Thanks so much for having me, Chris.
Yeah, start off briefly, introduce yourself, how your story, and we'll dive into the questions.
Sure. So started my career at Deloitte out in San Francisco, was a CPA for them in time, started my own CPA firm, focused high net worth real estate syndicator. So a lot of former apartment gurus in the Dallas area are former clients of mine, grew that up. My wife at the same time was managing our real estate. So we started off single family. I would like to think we were brilliant in 2010 getting into real estate. I think there was a little luck involved as well. In time, transitioned to hotels and apartments, made some money. 2016, 2017, frankly, I was on the brink of a divorce. I could never get away from the CPA firm and all the time that went into it. And so I really wanted to make some changes. And so we sold out of a lot of our assets in that time frame, declared work optional, traveled the world for 3 years, and got the best souvenir we could have out of that. And that was our firstborn son in 2019.
Yeah, wonderful. Congratulations. Really inspiring story. And so for a lot of the audience, they're high income and like you mentioned, they're tied to their job and they're very limited on their time. And this idea of work optional is actually born, I've heard of it. It came out of the COVID, really. What's the difference between why would somebody choose to retire versus make it work optional? What are the differences in the mindsets or what people are looking to get out of it?
Sure. So trying to tell a bunch of entrepreneurs to retire and do nothing sounds painful for them, which is why I created the term work optional. I realized it has since become more useful, and I think maybe somebody else had the thought at some point. But I love that term as just the option to work. You've got the freedom on whether or not you really want to continue into business. But once you've got the freedom where you've got the passive income that exceeds your lifestyle expenses, that means you're not forced to work anymore. And it brings all sorts of freedom and opportunity. So now if you want to work, and especially if you've got an impact, it makes sense. But like I said, there's the freedom to do what you want when you want and spend the time with those you care about.
Yeah. And so an adjacent or follow-up question is a lot of doctors, some of them are burned out and some of them, they, when you introduce this passive income stream or when they actually become work optional, talk about the benefits of even though you don't quit your 9 to 5 or your profession or your career, you're much happier if you are work optional. Talk about that.
So one, giving you the choice on whether or not you go to work today really, once again, it gives the choice. There's a freedom in deciding if you're going to do that. And more importantly, a lot of doctors, I've got a lot as clients, they do get burnt out. It's a lot of hours, it's long hours. And doctors over time often don't have a lot of time to vet investments and they get frustrated. They're often looking for tax stuff, and a lot of stuff isn't always vetted. And so, part of what we do in our community, we've got a due diligence council that will vet stuff. I don't get paid based on how people invest. And so, there's a more vetting process to help ensure if somebody's going to invest in something, it's actually a good investment. And we have a few tax strategies that also fit high income earners.
Yeah, and what's interesting because we know I know you have an event coming up end of October, which we'll talk about and talk about creating a mastermind. I met Brad Sumrock this past weekend and like this community, which is
And
because
Brad's a
you
former client of mine. I'm very familiar with Brad. Him and my wife used to work together doing something else in the real estate business.
yeah, and I love that. I love it's a small world. We're this is a investment and financial podcast. So how can investors identify cash flowing investments with asymmetrical risk? Talk about asymmetry and where are the best
Yeah.
opportunities currently available.
So some of that is looking at investments that have a high upside and low downside. Finding them can sometimes be tricky. And sometimes people, when they're investing in the next big thing, are actually investing in the opposite, where they can lose their money and there's not a whole lot of upside left. So one of them might be the stock market right now. By many different metrics, it's at all-time highs in valuations. And so this doesn't mean I exit everything I'm doing instantaneously. It means that we might be over time putting our money into other investments. I also know real estate right now is struggling. And so I'm really looking for where are the opportunities out there. So one is looking at the floor. So like natural gas right now, adjusted for inflation, is selling for the lowest price in US history, lower than the 60s anytime out there. So maybe I'm going to get into a vetted oil and gas fund. There's a ton of scams out there, but if you do your due diligence, you get into some of those funds that really have a high upside, provide some returns along the way. It makes a big difference. You might also look at one of the examples somebody gave recently was platinum. When was the last time anybody has talked about platinum? If you look at a gold chart over platinum, the two were in sync with each other for a long period of time, and then platinum has just faded to the background. And so, as people are looking for other stores of value, platinum might be an option. So, that's a big thing that we're looking for is where are the undiscovered investments? How are we adding value where this is significant upside?
Yeah, I was recently listening to a talk by BlackRock, and they're actually doing what you're doing is actually not asymmetry, but they're looking for assets that are uncorrelated, and when that correlation goes very close to zero, where it becomes basically it's like gold or whatnot, they become extremely interested in it. It can produce significant returns.
You're exactly right.
And, sorry?
I said you're exactly right.
Yeah. Yeah, was you mentioned natural gas and you mentioned platinum. Other things I've heard about are copper and silver. What are your thoughts on those two?
I know silver is a little behind, and usually silver, like there's a correlation between that and gold, and it's undervalued in that correlation. And usually, once silver picks up momentum, it overshoots gold, and there's more industrial uses for silver. And so I never know the timing of when these are going to pick up, and there's usually some catalyst in the market to have that happen. What's also unique is in the past, we had two sources of value, primarily gold and silver. We also have Bitcoin now, which is another store of value that people have been getting it into, which is why I suspect silver hasn't been as popular recently, but I believe there will be a comeback at some point.
Yeah. Yeah, you mentioned Bitcoin, and I was hesitant because it's just wildly fluctuating, but it is a very early asset class that people are really paying attention
Yeah.
to.
But its volatility, if you look at it, sorry, its volatility is shrinking. And so that's why I think it's becoming a more promising asset class.
Yeah. Shifting to tech strategies, what are some advanced tech strategies that entrepreneurs and investors often overlook but could significantly improve their financial position?
Yeah, so if you're a W-2 earner, you likely know there's less opportunities out there. There's still some things. Sometimes people will talk about depreciation, passive investments. If they're honest with you, passive losses can only offset passive income. And a lot of people get that wrong. And that's why sometimes people fall into that trap. But some things you can do, oil and gas, working interest, certain charitable deductions. Some of it depends on if there's alignment in how you want to give your money. Anyways, a big one that almost nobody's ever heard of is discounted rollovers. So you can take any amount of money in a traditional 401k or IRA and roll it to a Roth at a 20 to 80% discount. How do you do that? There's a few examples out there. I'll give a simple one. So let's say you were to invest with somebody who is buying a hotel, an operating hotel, and then your $100,000 goes in there from a traditional retirement account. Day one of the investment, they shut it down. What is a non-operating hotel worth? A whole lot less than what you paid for it. So we get an independent valuation done by somebody who's able to appraise the asset, and maybe it becomes worth, we'll say $50,000. I'm just going to make numbers up. Your portion is now $50,000. We do a rollover of the asset, not the cash, from the traditional account to the Roth account. At $50,000, you're going to pay taxes on the $50,000, but then it's all within the Roth. So after that hotel is converted to an apartment complex, now we've got a spike in value all within the Roth, and you're never paying taxes on it again.
Yeah, that's really, and like I said, tax planning and tax strategy, you always want to do it with a professional, and which kind of moving into self-directed investment tactics. And a lot of people know the benefits, but what are some of the challenges of self-directed investments, and how can people make the most of them?
Yeah, so self-directed investments is really you getting into private assets that aren't always publicly traded. And the fact that they're not publicly traded adds a little bit of risk, but you've also got the return, the potential for a much higher trade-off or return. Now, the trouble with that space is because it's unregulated, there's a lot of risk out there. And so we've discovered a lot of people are trying to do this on their own, and they're making mistakes in that they don't know how to evaluate the legal documents, the team, and so they put money in and then they lose big. And so one of our answers to that is our due diligence council. So if we're vetting an oil and gas deal in our community, we've got the chief drill officer of a publicly traded company. He's got decades of experience in oil and gas. And so he'll come in, read the technical reports, and help vet the sponsors. So doctors and lawyers aren't a great fit for vetting oil and gas funds. However, we had a medical practice buying fund come through earlier this year, and they were a fantastic help in helping vet that. So the part of being in a community is recognizing we all have skills, we all have background, and it's about who's the right person at the right time to step up and be a part of that vetting process. And so if you've known all these doctors have vetted this medical practice buying fund, we've looked at the teams, we've also got a lawyer in the group that loves looking at due diligence documents, all those people together, we're able to de-risk a lot of deals. And so there's a lot of deals that never make it to our investment menu. And it's really the power of the community working together that helps eliminate the bad deals. So you're really just looking at the deals with the highest potential for upside after that.
Yeah. The next question I have for you is, especially coming towards the end of the year and the Fed just dropped interest rates last year, where do you see the economy heading? Like I'm just always picking investors' minds, their brains around interest rates, the economy, potential administration shift or change, and your thoughts.
Ooh, that's a big one. So I think the economy is faltering. I know a lot of our clients invest in real estate, and that bubble has been deflating. And so there's some investors that have lost money depending on who you're with. But if anything, most projections have gotten pushed out. I so we've got a half a point cut recently, and that's going to be a big help. According to the Fed's own projections, they think that we're going to drop another quarter to half a point before the end of the year, which I think will also help. I think the economy, if you look at in my last state of the market over the summer, a lot of things have remained flat, a lot of indicators, so not up, down, unemployment ticked up a little bit, but overall things are doing okay. Now, if Trump gets elected, he's suggested that he wants to take over the federal bank instead of having its independence. And as a result, he would likely have them cut interest rates. Now, in the short term, that'll be good. And the long term, having the president being able to manipulate interest rates to make his approval ratings look better might not be the best fit, regardless of whatever political party you're in. So we'll see. There's a few other factors I could speak to about private equity and insurance, but that's overall where I think we're heading.
Yeah, I really love your analysis, and it's always great to get different opinions. We're coming to the end, and yeah, I know you've got a mastermind community that you've built. You also have a upcoming event, so talk about that and how can people find you and those that want to be work optional in 3 to 5 years, how can they do that?
Yeah. So our goal, like you said, I help millionaires really with the education, all the tools and resources to reach work optional in 3 to 5 years, especially if you own a business. We will do that analysis and help you decide if it's a good mutual fit. We only take on people where we know we can help. The other thing you mentioned is we do an annual passive investor event. It's regardless of whether or not you ever join Financial Journey, it's a one-stop shop for you to meet accountants, lawyers, investment providers, insurance providers, the charity, all in one place. We do it in a way where we also do a mastermind there. You're put with people with a similar focus and level. So you're really getting the support you need. And so that's October 25th and 26th in DFW. You can find that at passiveinvest.com or connect with my personal website, financialjourney.life.
Yeah, I really enjoyed that. And for the audience, Keith is a really big influencer in this space. So be sure to check out his resources and follow his socials, and check out the events. These will be in the show notes. And thanks again for coming on and sharing your wisdom and expertise.
Thank you, Chris, so much for having me.